theft, those kinds of things, okay? And so if we just kept track of it by purchase, our numbers wouldn't be quite correct because of those little differences in there, okay? So merchandise inventory is based off of a physical count of inventory, okay? So merchandise inventory is an asset account, okay? It does not have a corresponding expense account. Like prepaid insurance has insurance expense. Supplies has supplies expense. Inventory does not have an expense account, okay? So it's going to be a little bit different. We are going to use our second account that we're going to use for the adjustment is income summary, okay? All right, so basically what we're doing here, we have our trial balance numbers, which are coming off of our ledgers, okay? And then we have the end of fiscal period information, okay? The difference between these two most of the time is what's been used up, okay? So for most of these, we are going to need to calculate to find what's been used. Okay, the one we're not going to calculate is depreciation expense. Okay, this is an actual number. And we'll make a note of that, just like I did here, once you get your books back, which ones you calculate, which ones are actual. That'll help you there too. Okay? All right, so the first adjustment we have to look at is merchandise inventory, because that's kind of a one that's a little bit different. Y'all have done supplies before. We just did allowance. We've done prepaid insurance before. Okay, so the only ones I'm really concerned about are the merchandise inventory, depreciation, and federal income tax. And really, we just talked about federal income tax, and I showed you what that entry looks like. Okay, so merchandise inventory doesn't have a corresponding expense account. So we use income summary. Okay, so that's one special note there. The other special thing about merchandise inventory is it can go up and it can go down. Okay, so at the beginning of the year, we have this much sitting in merchandise inventory. Okay, and when we look in our green book, okay, for merchandise inventory, notice it says January 1st. This account doesn't get touched again until the end of the year, basically. Okay? So our beginning balance is going to be shown to us. Okay? There's our beginning balance. Then somebody physically goes in and does a count, and we see what our ending number is. Okay? The difference between those is going to be our adjustment. Depending on what we've sold and what we've purchased throughout the year, that number could be bigger than the January number, or it could be smaller. If we've sold more than we've purchased, it'll be smaller. If we've bought more than we've sold, it'll be bigger.
Wait, so I've seen people where they do inventory checks like quarterly or monthly. Would then you touch the account then? Like you change it like every month? Like if they were to do it like quarterly or monthly, would you change it then?
They may. Because they're going to do quarterly financial reports, and so if they're doing a physical inventory at that point, then they're probably making the adjustments then, quarterly. Okay. All right, so inventory merchandise, or merchandise inventory, let me do that. Merchandise inventory may increase or decrease. Okay, if it increases, it will look like this. Merchandise inventory is an asset, right? So if it's going to increase, what's going to be my debit? I need to increase the asset, merchandise inventory. Merchandise inventory is going to be my debit, right? Because it's an asset. So on the 31st, merchandise inventory is my debit. Income summary is my credit. So this is my debit, this is my credit. Okay, if inventory is decreased from January 1st to December 31st, then my debit has to go first. I have to decrease merchandise inventory with a credit. So income summary is going to be my debit, and merchandise inventory is going to be my credit. Okay, so again, when we look at our books for authentic threads, it gives us an ending number for merchandise inventory. Okay, and here is our beginning number for merchandise inventory. Okay, and so on our worksheet, this will have our beginning number. We'll find out what's been used up. This will be our ending number. Okay, and we'll have to make that adjustment in our journal, just like this. Okay. Okay. And then let's go ahead and just make a note down here. We're not going to be able to go through all of these like I wanted to. For accumulated depreciation. Okay, so depreciation is when you buy something like a house, a building, equipment, a tractor, a truck, something like that, that's going to reduce value over time. Okay? You know when you go buy a new car and as soon as you drive it off the lot, is it worth the same amount that you just bought it for? No. Okay? Is it worth that same amount a year later? No. If you try to go resell it, it's not going to be worth what you bought it for, right? That's depreciation. And so we have to keep our records accurate year by year. Most of those things depreciate over multiple years worth of time. So what we're going to do is we're going to figure out, we're not going to figure it out, they're going to tell us what the depreciation expense is for this year for any building or truck or whatever it is. Okay? And we just need to make that adjusting entry. Okay? That's a whole chapter in accounting too. And they're having to depreciate their houses and hotels and monopoly over there right now. So, okay. But to keep it simple, we just want to know at this point, what does it look like in the journal? Okay? So, we have depreciation expense and accumulated depreciation. Okay? So depreciation expense here, you can see that we have store equipment. That would be like cash registers, things like that. Office equipment, copiers, computers, maybe something like that. Okay? And then over here, accumulated depreciation. Okay? Expense is always our what? Debit or credit? Debit. Okay? So depreciation expense, let's say this is on the 31st, is our debit, and accumulated depreciation is our credit. Okay, and these are going to be actual numbers. Okay, I've marked actual up here as well. We don't have to do any calculating. They're just telling you what the expense is. Good on that? All right, so that gets us through our adjustments. We can extend everything. We can finish our worksheet. Then we actually need to complete the income statement and the balance sheet. So these numbers are going to help you. Okay? So in your packet, oh, and I gave you an example of all the adjusting entries. Okay? These are not from authentic threads, but just again, this can be a huge reference packet as you go through this ending period. Okay? And we're not doing interest, receivable interest income, so that's why I marked that one out. But all the other ones we should be doing as adjusting entries. Okay, you have that in your packet. All right, then you have a couple of pages. Actually, I only want to do this. So this right here is basically your worksheet on the income statement columns. Okay? Scratch out dividends. Okay, income summary is our changing point, right? Balance sheet columns are on the top. Income statement columns are on the bottom. Income summary is our dividing point. Okay? Then I gave you the balance sheet side. Okay, and I added dividends to the bottom here. So we scratched it off the top of the other page. Okay, so this is the top half of the worksheet, the last two columns. Okay, all this transfers over to an income statement and a balance sheet right here. Okay, so you're going to have to use these as guides to know kind of what goes in what column. Okay, it's just repetition and routine as to how a company sets their income statement balance sheets up with all the math. Okay, because this is a little bit more complex than what we did the very first time we looked at this. Okay. So we have different sections. How do I want to show this? First one is operating revenue. Okay. Notice how it has the words operating revenue and then a colon that tells you that this is a section for this. Okay, and then we have sales less the sales discount and the sales return and allowance. These were contra accounts to sales. Okay, these numbers will come from your, I don't want to show you that worksheet. Okay, there's our income summary. Okay, so there's all three of those. So sales, 697,375, 697,375, right? Discount. Now we're going to take this back a level because we're doing some extra math in here. We're going to subtract both of these. We're actually going to add both of these, then subtract. Okay? So we're going to subtract the discount and the returns and allowances. So there's our numbers. We'll transfer them over here. Okay? This is the total for these two. This minus this equals this. Okay? This is going to be important for you to know where to put each number in each column. Okay? Because there's really, again, there's no rule to it. It's just what the company, whoever creates this, how they want to show it. Okay, as to what goes in what column. The best thing I can say is that you've got revenue minus expenses equals net income, right? Basically, here's your revenue. This is actually your revenue minus all your expenses equals your net income. So we're going to try to keep this last column as simple, and those are your major numbers as possible. Okay? Then the next section is called cost of merchandise sold. Okay, and again, you'll use this as your guide as to what accounts need to be listed. Okay, so this is our section for cost of merchandise sold. We actually have to go find our January 1st merchandise inventory number, which will be the very first number in your green book for merchandise inventory. Okay, this is your beginning inventory. Okay, then we'll have purchases, discounts, purchases, returns, and allowances. Those come from right here. Okay. Then we're going to have an ending inventory. We did our adjustment. Okay. We had a beginning inventory. We figured out what the difference was as our adjustment. We have an ending inventory. Okay, so that's where this number is coming from. And then we can figure out what cost of merchandise sold is. And that's a super important number, so keeping what? Yes. Super important number, merchandise inventory, because it affects net income. It affects gross profit, it affects net income. So it's important that the inventory is accurate. Okay? Then you have all of your expenses. Okay, that's simple enough where that's going to come from, right? That's in a section there for you. Okay, and then you basically got some extra income coming in with interest income, and then there's your section for your taxes.
What is income from operations?
If we have any interest income, I'm not sure that we're going to have any interest income.
No, the income from operations, like interesting.
It's just a heading. It's just another little group, just like operating revenue, cost of merchandise sold. Let me look real quick. I'm not sure y'all are going to have that. We may not even need to talk about that. Yeah, we're just going to have expenses and then our taxes. So really, we're not going to have to worry about that part in Authentic Threads. So we haven't done anything with interest. Okay, and then you'll have the before, the new expense, the adjustment, and or with all of the expense, and then the tax. Okay, again, you're just going to have to use this as a go-by as to what column holds what number. Okay. Same thing for the balance sheet. Basically, you have assets, liabilities, and owner's equity, right? That's what a balance sheet is. And off your worksheet, you're going to have all of that information, okay? The only thing is this section is going to be a little bit different. It's going to be about stockholders' equity. In your book, I give you what the equity is going to be. We're skipping that part in Authentic Threads, so I'm going to give that to you so you have those numbers. Okay? Then you remember closing entries. Guys, we got like 3 minutes and I can fill that up. Austin, sit down. Do you remember the 4 steps to closing entries? Income statement credit to income summary. 2, income statement debit to income summary. 3, income summary to retained earnings. And 4, dividends to retained earnings. Okay, you've got sample closing entries here, so you can see that based off of the numbers that we've done. After you complete closing entries, you need to post and then complete the post-closing trial balance. And there's a sample of that on the next page. Okay? And that's just any account in your